Hey, this week's outlook. It's going to be a big one, nevertheless. This next week, we've got a lot of geopolitical tensions. Filming this on the Saturday, so something could happen on the Sunday, which I don't go over. But we're seeing a lot of tensions geopolitically between Iran, Israel, and the US. And obviously, we now have the Supreme Court ruling of the US tariffs being ruled being deemed not allowed, so he's now had to use other legislation to then put forward a 10% tariff, which today he then bumped up to a 15% tariff. So it's going to be an interesting market open, that's for sure. Going over the events, the key events that I'm looking at this week. I mean, it's a very quiet week data wise. So if we actually go to my watch list for this week, you'll see we only have 5 things. The first data point being on Wednesday, which is the inflation print from Australia, which is expected to slow by 10 basis points. Then on Thursday, we've got 2 Japanese-related data. We've got the Bank of Japan speech from Takada, who's typically hawkish. And then we've got retail sales year over year, which is still in the negative territory, but it's expected to improve. And then on Friday, we have the US PPI month over month, and then also GDP month over month from Canada. So that is essentially the main data this week. The only really serious one that's catching my eye is obviously inflation out of Australia on Wednesday, because that will decide whether the yield repricing in Australia is going to continue to support a rate hike in May, or if it's going to lead to some dovish repricing, which could lead to a very nice opportunity for some more longs. But let's make this full screen and just go straight into the US dollar. So as mentioned, geopolitically, we are at a very tense moment regarding Iran, the US and Israel. And when tensions like this are prolonged, like we are seeing, I mean, it's been prolonged since January, the dollar typically tends to benefit from a safe haven perspective, which we are seeing. We're seeing a nice bit of momentum up to the upside in the dollar. Short-end yields are starting to stabilise and have retraced the downside reaction function from the CPI print, which obviously was here. The CPI print came in rather dovish, but we've retraced that now. And then obviously the FOMC meeting last week was hawkish. With the calendar this week being relatively light, we shouldn't see the pricing in of data move the dollar that much, and we're also seeing decent inflows into the dollar from a lot of the big funds, BlackRock being one specifically. So yeah, this week on the dollar, we are definitely bullish. If we just go through some of the institutions, click on this one here, we can see from ANZ, they are moderately positive on the dollar for next week. They're looking to trade it against the euro because they believe some of the euro's gains are going to be unwinded, as you can see here. We think there is room for an unwind of recent euro gains, which is obviously bullish dollar, bearish euro. So they're looking for some euro dollar shorts, which we can see. Definitely there's definitely better pairs we think to trade with the dollar, like GU. But yeah, that's ANZ. BNP are also bullish on the dollar, but against the yen. So they're actually seeing some yen outflows, and they basically just think the next Bank of Japan hike is going to be in April, so it's going to be a bit delayed from now on. Obviously, you've now got carry working against dollar yen, and then you've also got a pretty resilient US economy with obviously the geopolitical backdrop. So that is essentially what BNP Paribas are going over. MUFG actually disagree, but this is mainly like on a 6-month horizon, and this is heavy on the yen side. So yeah, I mean, that is really it for the dollar. I mean, last week obviously Credit Agricole said that they are focusing to remain on the dollar rebalancing theme for this week, or for last week, sorry, which we obviously saw. We saw a nice upside move in the US dollar. So yeah, that is essentially the institutions, what they're looking at next week. Yield reactions are actually coming out a bit more hawkish. FOMC was hawkish, NFP was hawkish, CPI was dovish, but we've retraced that now. So yield wise, it's looking supportive of dollar upside. And yeah, I mean, inflation's coming down, labour market is definitely improving. I mean, unemployment's fallen to 4.3%. So overall, the economy's not doing terrible. It's not doing terrible, that is for sure. So yeah, I mean, that is really it for the dollar. As always, we'll go over technicals at the end. So yeah, bullish on the dollar for this week. Moving on to the pound. So for the pound this week, as we have been, we are bearish. Last week was obviously a very big week data-wise for the UK. We got both the CPI and labour market data, both of which disappointed to the downside with the unemployment rate edging 10 basis points higher. CPI also fell 40 basis points, now around the 3%, with now to around 3%, with big institutions forecasting inflation to reach the 2% handle by April, which is reinforcing the downward trajectory of short-end yields. So yeah, I mean, you just have to take one look here at yield reactions and you can see all the data is coming in dovish. I mean, February's Bank of England meeting, dovish. The labour market data last week, dovish. The CPI, dovish. I mean, come over here to the recent news tab, it's all looking very pound bearish. And obviously looking down here at inflation, we're falling, labour market is worsening. I mean, this is definitely one of the most clear macro setups I think we've seen in the last 6 months is pound downside for sure. With minimal data releases for the UK this week, as you can see, I mean, this is really the two main data releases here, and it's one low impact, one medium impact. There's no high impact data this week for the UK. Rate differentials should remain the primary driver for the pound, which points to the downside on the majority of GBP crosses. So yeah, bearish on the pound. I mean, if we look at the institutions up here, Morgan Stanley, GBP bearish, Credit Agricole, GBP bearish, Nomura, pound bearish. Obviously you can notice these two are both against the euro, so they're a big fan of euro pound upside. So obviously, statistically, as soon as we get an opportunity for euro pound upside, we're going to get into it. ING, bearish on the pound. Berenberg, bearish. MUFG, bearish. I mean, you can just see here, all the institutions are bearish on the pound. Seasonality-wise, February is also the worst month for the pound, as you can see here. Yeah, February is not the best month for the pound, and yeah, that is really it for the pound this week. Moving on to the euro. In Europe, we are pretty neutral, as we have been. As we keep saying, it is very dependent on the cross. I mean, the data last week, the PMI data on Friday, painted a nice picture for the euro, with short-end yields rising by around 8 basis points, supporting the more hawkish members of the ECB. However, it was nothing game-changing, which is why we continue to be dynamic on euro crosses, buying the euro on some and selling on others, as mentioned. So, for instance, we're looking to sell euro AUD but buy euro pound. So, yeah, that is essentially there. I mean, insights, the institutions are pretty split on it. I think over a 6-month horizon, longer term horizon, they are definitely more bullish on the euro. However, short term, it's very much dependent on the cross. I mean, looking at the yield reactions, it's all very neutral, too hawkish. All the recent news is very, very neutral. I mean, February itself is a very neutral month for the euro. Inflation's pretty flat. The labour market's recovered a tiny bit, but it's still pretty flat. There's just not a lot going on in Europe. So yeah, neutral on the euro for this week. Going into the CAD. So the CAD, we are neutral for the CAD. However, we are leaning somewhat bullish due to geopolitical factors. So obviously, with US oil continuing to rise following the tensions, this should both provide support for the CAD and dollar whilst tensions remain elevated. Canada's short end of the curve, however, is continuing to fall, reinforcing the dovish data being priced into fixed income, which can most definitely leave the CAD vulnerable on a rate differential standpoint. I mean, as you can see here, Feb CPI dovish, February labour market data neutral, January's Bank of Canada meeting neutral, January's labour market data dovish. There's nothing majorly hawkish coming out of Canada at the moment. However, as of now, US oil is clearly driving the CAD, and therefore we remain optimistic on the CAD for next week. Seasonality wise, February's pretty good for the... Oh no, it's actually bearish for the CAD. Bearish to neutral, I'd say. We've got inflation falling, and the labour market's actually recovering quite well. So yeah, we're just neutral overall on the CAD, and it's going to be very much dependent on what happens with US oil next week. Going into the Australian dollar, we continue to be bullish on the AUD. Short-end yields continue to rise in Australia amid speculation of another rate hike this year, with the aim of containing inflation, which at the moment is very high at 3.8%. Equities ranging could potentially limit some upside in the Australian dollar, but we still remain very constructive. Copper and the Chinese yuan continue to appreciate, which also supports our thesis as it basically allows traders to buy the Australian dollar as a proxy for China. Next week we have Australia CPI as mentioned on the 25th, which is going to be heavily monitored and decipher whether the need for an RBA rate hike this year is needed. Consensus is for the year-over-year print to slip by 10 basis points, but this shouldn't sway markets leading into the print. Yeah, I mean, just looking at the yield reactions here, data is coming in very hawkish, and then insights, looking at the institutions, Morgan Stanley, AED bullish, BNY Mellon, AED bullish, ANZ, AED bearish. Oh yeah, that's actually an interesting one, but the reason they are bearish is because it's against the New Zealand dollar, and that was them forecasting a hawkish RBNZ meeting, which we did not get. And obviously MUFG again, AED bullish. So yeah, the institutions are definitely bullish on the AED. It's very clear to see that. The data is signalling strength, and the recent news, I mean, if you've been on this tab inside the web app, I mean, every week it's just bullish news. We have some bearish here, but that's pension fund related, quite irrelevant with FX. So yeah, bullish on the Australian dollar, and you're probably wondering why we didn't do the New Zealand dollar with the AED, and that is because we don't have the same bias this week, which is interesting. So we are actually neutral on the NZD this week, following the RBNZ's rate decision last week. It surprised most institutions, which lent heavily on the dovish side. So yeah, essentially the RBNZ meeting last week was very dovish. I mean, looking at the yield reactions here, the short end fell 31 basis points, which is massive. And yeah, we got a very big dovish repricing. That being obviously we saw short end yields fall 30 basis points following the print, and then another 20 basis points into the Friday market close. And with equities ranging and the VIX being very volatile as of late, we can expect to see some outflows in the NZD as markets kind of front ran the hawkish RBNZ narrative and are now starting to see rate differentials have a slight dovish repricing, which is obviously going to bleed into a weaker New Zealand dollar in the short term. However, a stronger China could benefit the New Zealand dollar to a certain extent, or at least cap the losses to some extent. Yeah, so, I mean, as you can see here in the recent news section from WSJ, the RBNZ won't be trigger happy when it comes to rate increases, a chief economist says. So yeah, AUD/NZD is a lovely play for upside, clear divergence there, and a lot more other very clear other clear opportunities. Insights, we have Morgan Stanley, NZD bearish, we have ANZ, NZD bearish, Credit Agricole, they're neutral on the New Zealand dollar. So yeah, I mean, it's pretty neutral to bearish institutionally wise for the New Zealand dollar, and to us makes sense. The data is supporting a neutral approach, yield reactions coming in a bit more dovish, and the institutions are looking pretty neutral to bearish. So yeah, we are very neutral on the New Zealand dollar next week. Looking at the yen. So the yen. For the yen, we are neutral, but we're tilting towards the more bullish side next week. So yeah, short end yields are rising. Over the weekend, the probability of a March rate hike has increased by 10%, which should increase as we move closer to the Bank of Japan decision in March. With the yen's movement being all over the place, really. 1 week it's strong, the next week it's not doing as well. The Bank of Japan will want to come across as more hawkish to curb some of the yen weakness. Not to mention big institutions like Mizuho forecasting a Bank of Japan rate hike in March. The long end of the curve continues to cool, which is providing the markets with another reason to go long on the yen, we believe. The institutions, for the majority, they're bullish on the yen. We've got Bank of America being bullish on the yen, RBC, BNP are actually bearish, but MUFG are bullish as well. So yeah, I mean, the majority of these institutions are actually rather bullish on the yen. And the data is coming in very hawkish. The yield reactions are very hawkish. The December Bank of Japan, January's Bank of Japan, obviously the LDP was neutral, but you want it to be neutral. You want the long end of the curve to fall, because that actually benefits the yen. So yeah, we are neutral to bullish on the yen, and then we'll finish it off going through the Swiss franc. So the Swiss franc, I mean, we're bullish on the Swiss franc for this week, as we have been, due to equities ranging, showing that there is still a lot of caution in the market, as well as gold continuing its rebound following last month's big pullback. With tariffs being thrown about and geopolitical tensions remaining very high, we are expecting the Swiss franc to catch a bid next week as long as sentiment remains on edge. So yeah, I mean, as always with the Swiss franc, it's very related to gold and sentiment, not much yield reactions, or like what's happening with inflation, etc. So yeah, that is the fundamental analysis done this week. Now let's get into the technicals. So, starting off with the DXY, I think we've actually, I don't want to say we've caught the bottom on the 1 hour here, but it's looking promising unless market open screws us. If market open does screw us, I'll mainly be looking for around this handle here, 97.25 for some longs. Yeah, if market open ends up seeing the dollar gap due to the tariffs, which I believe they're already priced in, but you never know. Yeah, I'm looking for either upside move there or an upside move here. That is what I'm looking for on the DXY. Going into the pound against the Australian dollar, I like these levels here. I mean, we closed very, very, very bearishly. I mean, not even a wick on the Friday close. But yeah, essentially, I'll be looking for a move somewhat in this region to the downside. Pound Swiss, we are in this, and I think if tensions remain high, we could even gap to take profit from the open. If not, I'm looking for this level up here. The 105 is looking very nice for a move to the downside. Pound CAD, obviously very oil related. Had a lovely bounce off this level here. I didn't actually get into this, but this level is very nice. If not, I'll be looking to probably get in again up here. But yeah, downside from around here. GJ, I'm looking for this level up here. Obviously, it's bearish against neutral to strong. I think if we do get the pullback all the way up here, I'll be more than happy to get in for a discounted price around the 210 handle for some shorts. Euro pound, this was a nice move as well on the Friday. I still really like this level. I mean, we clearly get a shit ton of orders as soon as price comes into this sort of 87.25 handle. And yeah, I think this level is very nice for some long positions this week. NZD dollar, obviously it's neutral to strong, but I think this level here for a nice tactical short makes sense, the 0.6. I think Euro NZD, we caught a nice position on this last week. I think this level for a bounce makes sense. It's clearly a very nice level, and I think if we breach that level, we're going to be looking at somewhere around here for a position. NZD CAD, obviously oil related as always with the CAD this week. This level up here, like if we come into some drawdown, I'm not in this, but if we come into some drawdown up here, I'd be more than happy to get into some shorts to catch it, the move to the downside. Regarding if tensions remain relatively elevated. GU, have we gone over this? No, we haven't. I don't know why the GU wasn't with the other pound pairs, but yeah, this level here looks nice. If not, this level here looks nice. Euro AUD, as mentioned, these two levels here are screaming to me for downside. Euro Yen, I actually like a bounce here, just tactically. I do like a bounce here. I think it's a very nice level, 182.25. Yeah, that's what I'm looking at. NZD Swiss, this level here is very nice. If we get into this, I'm surprised we didn't close more bearish on the Friday, but yeah, I like this level here. 46.5 for shorts. NZD Yen, I believe this is the last one. Yep, NZD Yen. This I'm going to be very careful on because it is two neutrals, but I mean, this level here is very well respected. And for us to breach above it, we're going to need to see something tensions-wise. Either tensions absolutely drop or we're going to melt to the downside, which I think is more probable. But yeah, that is essentially that for technicals this week. As always, drop a comment below with any questions or any setups you're thinking of taking. And for all the actual members inside the platform, we have a new geopolitical section coming very soon, which is going to be very, very nice. And I'll be sure to make a video on that once it is live and alert everyone once it's live. But yeah, that's a little update coming to the web app for all the current users. Always, there is a nice discount code in the description which will give you 50% off your first month, so you can test out the product, see if you enjoy it, see if you actually use it. And yeah, that is it all for this week.